Good morning. For those of you who weren't at the last session, my name is Michelle Davis and I head up the Clean Energy and Sustainability Group at Eversheds. We are an international law firm and my team is focused on working on renewable energy projects around the world, including here in this region. Thank you very much to the World Future Energy Summit for asking me to chair today, especially with such an esteemed and experienced panel who I would like to introduce you to. The format, though, for this morning is I think we have about an hour, and we're going to have a very short presentation followed by questions. And I have the, I don't know what it is, but I have the system here which allows me to take questions from you. So you can send me questions anonymously, but if you would like to speak in person, please just raise your hand and say your name and where you're from, and we can hopefully answer them. So our panel today is made up of two of the leading bankers in the market. We have Christopher, let me just make sure I pronounce your surname right, Chris. Christopher Cantelmi, who is a principal with the IFC and has been advising on and funding on projects in this region. Harry Boyd Carpenter, who's a senior banker in the Power and Utilities division of the European Bank for Reconstruction and Development, and both are very actively involved in the Egyptian market at the moment. We have Mark, now Mark, if I spell your name incorrectly, please tell me. Mark de Latilade? Close? I'll call you Mark, Vice President of Solar in the New Energy Division at Total. And last but not least, Jochen Vermuth, who is the founding partner and chief investment officer at Vermuth Asset Management, and it is Jochen who is going to do a short presentation, and then we will begin with our questions. Today's session is about global growth markets, and this panel are in a great position to give their views on where they see the growth globally, and in particular what impact that growth in particular parts of the world is going to have on growth in other areas. So I'm very much looking forward to this session. And with Jochen, would you like to come to the stage and do your presentation, and then we will follow this by questions. Thank you.
Okay, good morning, everybody. This is just a quick wake-up call why we're here. This is a nice website I recommend you when you buy a house called floodmap.net. You can input the expected level of sea level rise in the world as a result of climate change, and do you really want to buy a house in the location, yes or no? And as you can see, unfortunately, Qatar, Abu Dhabi, Dubai, a bit underwater in this scenario that we have here. This is just to remind you why we are doing what we're doing. We have a very, very big urgency to move fast. How did I come up with this slide? Where did the numbers come from? I used to work in physics a long time ago and learned about the albedo effect. And I heard that in the north of North Pole now, the Greenland ice is melting. If Greenland ice falls into the sea, we have 7-meter higher sea levels. You add Antarctica, we have 67 meters. And unfortunately, the beach has to be moved in a bit here. So this is why we're here, and we've got to move fast to avoid this happening. The good thing is that this region doesn't only have a lot of sun, it also has a lot of very smart people. There's a mistake here because it says previous Saudi oil minister Ali Al-Naim in 2000 said this. He's not the previous oil minister, he's still the oil minister. And he said in 2000 already, guess what? The Stone Age ended long before we ran out of stones. There was new technology. And the same is happening to the oil, gas, and coal industry. It is going to end the fossil age long before we have oil, gas, and coal reserves running out. In 2006, he proceeded to say, we'll be exporting solar power from Saudi Arabia. Very visionary, but not yet done. Hopefully, with the announcement we heard this at the IRENA session at this WFES, with solar below grid parity, it may well happen. The good news is, we had this already for a long time. These tiny squares here are enough to power all of the European Union, and this bigger square is enough to power the whole world's energy needs. It is absolutely obvious that we can be a happy nation, happy global society, fully powered with affordable, cheap oil, not oil and gas, but solar. The problem was that it used to be expensive. My mentor, Hermann Scheer, one of the co-authors of the IRENA, started with feed-in tariffs in Germany at about 700 cents per kilowatt hour back in 2000s. So the German people have brought a number of bad things. I come to you from Berlin. Over the last century, this century, try to do something better. We, the German citizens, started paying feed-in tariffs at these levels, and we managed to bring, through scaling effects, the global price of solar and wind and geothermal down to levels where they're below grid parity. And if people haven't believed it yet, there is big news for them. Al Gore puts it the following way. Until now, solar, wind, geothermal were dependent on subsidies. Any government decision to stop the subsidies would have killed the market. Now we've broken through grid parity. It's like a dam breaking. There will be no one in their right mind building a coal, gas, or oil power plant anymore. Got to move on. However, many people point out nobody uses oil for power. They use it for transport. Well, here's news. You got my wife on the left in a Tesla, a Roadster. Some early adopter problems. As you can see, closing the window, she prefers using the umbrella. But there are other issues with the electric car so far. It is 3 times more efficient to use. I paid 2 euros for 100 kilometers, you paid 10 euros. It has nothing to repair. In 5 years, the car had only the windshield wiper and the brake pads changed because no moving parts. The problem until last year was the cost of this car, 150,000 euros, not everybody's Golf. Last year, our portfolio company in Germany managed to buy a Nissan Leaf for 30,000 euros, of which 20,000 euros is the battery price. The car earned 2,000 euros per year, charging the battery at night, discharging at peak prices during the day. Over the life of the battery of 10 years, it earns the 20,000 euros. Now my proposition to the market is Nissan Leaf for 10,000 euros net. You pay 1/3 of the energy, you don't get cancer using it. It goes from 0 to 100 in 3 seconds, and the Tesla S has the insane mode, does it with 7 people. And we're almost done. How fast can this happen? Am I talking futures? Am I smoking pot? What's going on? Here's an example of Wall Street. Wall Street has a thing called the Easter Parade. In 1900s, there were only horses on the road. What was the problem with the horses? The stuff coming out the back, and they weren't going fast enough. The best investments in 1900 were steam engines, and the best investments were whips to make the horses go faster. The first Dow Jones index only had steam engine cars. As late, railway cars company. As late as 1930, the steam engine company said, we've got to invest in the steam engine, it's the only future, in 1930. Guess what? At the Easter Parade in 1913, not a single horse was left, cars only. Guess what happened to the Dow Jones Index in 1914? Not a single steam engine company. This was before the internet age. We will move much faster this time. You've seen the price of oil. You've seen the price of coal companies. You will see the price of oil, gas, and other companies collapse. So if you're smart, divest from fossil fuels, invest in the things that we will present today. What are the addressable markets for the future? When the world collapses, there's great opportunity. 1913 was the year when the Rockefellers, the JP Morgans, the Carnegies were created. We have the chance now to create the new leaders of the new industrial revolution that's underway, information technology enabled, resource efficiency, renewable power applications, and other opportunities abound. Because we happen to come from Germany, this is what we plan to do. In Germany, we can move from all of our fossil fuel cars off the road today, replace them with electric cars, and build no additional power plant. In Germany, we're on average 4 times more energy efficient than in many other countries of the world. So if only we take resource-efficient companies from the European Union and bring them to other parts of the world, I hope we can do a big contribution to climate change. And of course, the biggest opportunity lies in the Middle East again. You have by far the most sun. You can power the whole world here. So I hope we can do it together. Thank you very much.
Thank you, Jochen. Thank you, Jochen, for setting the scene so beautifully for this presentation. So I'd like to, before we get into the detail on which parts of the world specifically we think are going to be the growth markets, and I appreciate that will involve a degree of crystal ball gazing. My first question is, what do you think to date have been the key drivers behind the growth in renewable energy? And then let's ask a second question. What do you think are going to be the key drivers for the sector over the next 5 years? And Mark, I wonder if I could come to you with that general question first of all. So to date, what do you think have been the key drivers?
If we look at the last few years in the development of renewable, and I will focus more on solar activity because this is an activity I know a little bit better, definitely cost and competitiveness, as it was very well illustrated by my colleague before, has been a key driver. And if we look at the cost of the PV, for example, in the last few years, it has been divided by 5. And we talk only about the PV, which is just one component of the competitiveness. Financing, access to financing also, and I'm sure that my other colleagues from the panel will develop further on this very critical issue. Financing has been improving significantly, and acceptance of renewable energy on the side of the financing institution and the banking institution has been something growing and very crucial in the developing of competitiveness of solar activity. So innovation has been something which is a key driver. If we look at the efficiency of panels, for example, the sun power panels, which are the ones that Total is associated with, 22% efficiency is quite significant and keep improving. So innovation, costs, all of this is driving what the so-called LCOE, the technical cost of the solar going down and being very competitive with a conventional source of electricity, such as nuclear, for example. It is noticeable in France that since a couple of months now, the solar is competitive with nuclear, which has been a major source of electricity in the past. So all of these have been key drivers, but I think to put also in perspective the commitment of authorities, the long-term commitments of governments, the support of institutions for renewable energies is definitely a key driver also, and will continue to be so because of the nature of the electricity, because of the importance of the IPPs in many countries, the integration of the renewable, regardless of the subsidies, is something that will have to be considered in the future. And if we see in the development in the last few years, in the US, very strong support, not only ITC, not only support in terms of tarification, but also capacity to integrate intermittent source of energy. So this is a key driver. And just to add one word, I think, which is very important, we look at this market, which is very specific, looking at the cost on a 2, 3, 4 years perspective. Because whenever players are answering to a tender, they are making somehow a bet on the future, and we all know that. And it is based on cost roadmap and capacity to deliver a project at a certain cost, which is a combination of technical cost and financing cost. Okay? So, but ultimately, what matters is the capacity to deliver. What our colleagues was presenting just before, and a very promising future for renewable energy will materialize if and only if all the players are capable to deliver. And the delivery is a key driver for the credibility of renewable energy. And I think this is something very important, also a message to all stakeholders, starting by government, public institutions, which are key players in big tenders. Long-term commitment, credibility is something to be considered.
No, thank you, Mark. And I just want to pick up on one of the, well, your main theme, actually, which was what we've seen, which has contributed to the growth, is the declining cost of renewables. And that's come about through innovation. It's come about through lower or a revised EPC structuring, and in particular, the financing costs. And of course, what we have also seen with this maturity is the earlier recycling of capital and the entrance of institutional investors quite early in some markets. I'm talking about Europe and North America in particular, but you know that model now is well entrenched. And Harry, in terms of the financing, would you say that, you know, in the last 3 years, your approach as a bank and a banker has changed because of the maturity of the technology? And is that leading you, I appreciate what you can lend is confined by other factors, but is that enabling you that this maturity in the technology, the reduction in cost, but more the maturity, is that enabling you to lend more and participate in further growth?
Well, there's a number of separate questions, I think. I mean, one is, has our approach to financing changed with the shift in technology? And I mean, the big shift for us as EBRD is that historically we were, I think almost all our renewables was wind and hydro. And that's largely because if you look at a map of EBRD's countries of operations, before we started operations in this region in 2012, if you look at that map, almost all our countries were cold and wet and dark. And, you know, but fortunately quite windy. So for us, the big shift has actually been getting to grips with solar. And we've come into solar as it's passed this inflection point. I mean, the first sort of serious utility scale solar projects we did were Round 1 Jordan at what seemed at the time a pretty aggressive tariff of $16.9. That now looks, you know, twice as expensive as the next round. So to be honest, we're still figuring out what this means. And has it shifted our perceptions? Not yet. I think we will get there. I think there is a very different way you need to look at it. I mean, if you look at solar projects now, you're talking about projects which have very little fuel, well, no fuel risk, at least I hope no fuel risk, very little technical risk, and are close to or the cheapest power on the grid. That's an incredible proposition. And that's not a proposition that any of us have engaged with before. We've either done, I mean, I started my career doing coal-fired projects where you could be confident you were very cheap, but you knew it was going to take you 4 years to build it, 2 years to fix all the problems and get it to actually complete, and then another 2 years to do the restructuring to deal with the cost overruns. You know, then we started doing wind. Okay, technically much less problematic, but you were way out the market, you know, financially. Suddenly we're dealing with a technology which is both really quite safe technically and now cheap. So I think we will have to rethink, you know, what our credit perceptions and our financing structures. Have we got there yet? No, but I think that's what's coming.
So, Chris, as we move towards, and I think this is going to be important in answering the question as to which markets we think are going to be the growth markets, as we move towards grid parity and non-subsidised technologies. And in fact, in the UK this year, we're expecting projects to be built. Funds are being raised to invest in projects on a non-subsidised basis in the UK, which is pretty incredible. Oh, yes. I can talk to you about that later. But
that's only because our price now is driven by the enormous amount we wish to pay EDF for nuclear power. So.
Partly. So, Chris, in terms of the financing, do you agree with what Harry has been saying? And in particular, as we move towards a non-subsidised market, does that present you with some other challenges because you're then more dependent on the merchant risk in the power market generally? Could you shed some light on that, please?
Yeah, I would say, I mean, slight difference in that we have a few more countries that are warm and sunny. So IFC has been involved in solar power as well as other renewable technologies, which you guys have as well. But probably for a bit longer than the EBRD, we've been involved in South America and China and other markets for quite a long time. But what I think is the general theme here is that, and Joaquin hit it first, is the convergence to grid parity, which is a sea change in the market. And it's a sea change in the way bankers will approach financing these transactions, because the early renewable projects in Europe or America relied on subsidy. And the first question any investment committee would ask is, you know, how sustainable is the subsidy? And we saw in Spain and other markets that as soon as the national governments hit the wall in their finances, then the subsidy is the first thing to be renegotiated or pulled. And suddenly you go back to fundamental cost of power and who is the lowest cost producer. What's changed, and we've just seen it in the last couple of years. I mean, 3 years ago when I joined IFC, there was a big debate about would CSP get the lowest cost producer or solar. CSP has its advantages. It has storage, overnight storage, but we've seen the price of PV drop by a third. I mean, to a third of what it was, by 2/3, and it's created a whole new world, which you no longer have this debate with your credit committee whether or not it's the lowest cost, or certainly in markets that are not oil producers. In oil-producing countries, they've gone through a long evolution of accepting renewable power because they've realized that gas isn't as readily available as it used to be, and they weren't reflecting the true costs of natural energy in it. So this has been a big change. And it really is revolutionary, as Joaquin has mentioned in his presentation. I'm missing the last part of your question.
The last part of my question is, and I understand what you're saying, in that if we move into a non-subsidized world, that makes it a lot easier because you're not bound by, you know, some of the regulation and the process that's involved with the subsidy. You're not subject to retrospective changes, which is what, quite frankly, many of those still involved in Europe are quite looking forward to. One of our clients said, you know, we're just so keen not to be bound by all of that and just to be able to get on and develop our projects. And I appreciate in Europe there is a more liberalised market. But do you see there being any challenges with the merchant power price in terms of financing if you're in a non-subsidised environment?
The market risk. Is there now a market risk for the
Yeah.
price?
Well, I mean,
Thank you, Jochen.
I don't think that you're quite ready for a fully merchant renewable project. I mean, the problem with renewables, at least until the time that the battery technology or storage technologies are ready to be mass produced, comes into play. You have irregularity to the production. Solar is more predictable. You know that you need it it comes during the day when you need it, so you can perhaps sell into future markets or day-ahead markets based on a profile. But for other renewables such as wind, you have volatility, you have other issues. So you're more or less a price taker. So you have to be sure that the price in the merchant market is always going to be something that you can live with, and repay your capital costs over time.
Helpful.
So it's still a bit tricky. I mean, we see in Turkey, for example, where you can play in both markets.
Right.
And it's really, it would have dried up completely now that the Turkish power prices have fallen, which had encouraged so many investors to come into the Turkish market. But now all the renewable producers are relying on the feed-in tariff.
Yeah, exactly.
So it's a bit of a mixed bag when you
that's
talk
helpful.
about merchant markets.
Michelle, if I just come in, I mean, I think there's one issue which is the market risk, and that is a challenge. And I mean, I think it's very hard still for banks to get their heads around market risk. We did a wind farm, 120 megawatt wind farm in Morocco last year, which sells not to the grid, not to our NE, but sells through the grid to a portfolio of cement companies, which is a private-to-private sale. And I think it's a pretty remarkable project because those companies are saying, okay, we're going to buy wind because it's a competitive supplier of power. But that is a very difficult transaction to get to work. And what's missing in most of our countries, and I suspect it's true for Chris as well, is the power sector reform. That you may well have renewables as true, if you look at the true cost of power as being the cheapest cost, but the sector structure is such that isn't transmitted. It doesn't look cheap. And it certainly isn't, it still requires a massive subsidy compared to end user tariffs. So, in terms of, what needs to change in the financing, yes, it's of course enormously helpful that the price of the power is now the true price of the power is now much cheaper, but you still need, a whole series of reforms at the sort of the front end of the power sector before you can really rely on that. Because if people are still only paying, $3 cents per kilowatt hour or even less, and if the conventional cost of power is still perceived to be very cheap because gas is subsidized, full long-run costs are not recovered, you can't rely on that. You can't actually monetize those benefits.
That's very helpful, Harry, and that point you make about the Moroccan project. Of course, you probably also had the off-taker risk to get comfortable with, and we're working on a number of those projects in the region, but in particular in Jordan at the moment, and my colleague Indraj is experiencing some of those challenges. But picking up on that theme of a distributed energy market, and Johan, I want to come to you and then just get the views of Mark and others on the panel, because I think this is, in many respects, one of the key questions in terms of what drives future markets. If you had to pick a single factor or driver that was going to disrupt the power markets globally over the next 5 years, and I think I know what you'll say, possibly, what do you think that is? And I would then, after that, so you can start thinking about your answers, I'd like to also take that into distributed energy solutions and how relevant are national grid systems going to be? And again, does that change the dynamics of which markets we think are going to be core? So can I ask you that question? Which is the single factor you think which is going to be transformative?
If you know the answer that I have in mind, then you know more than I do, because my mind is empty. But
well, I was listening very carefully to your presentation.
Okay. No, I think that absolutely, as a lawyer, you probably know this. I think the most annoying thing to any investor is the red tape, the local regulation. And actually, it's the idea of Michael Eckert that I'm now presenting. He came up with the idea that just as an international transaction, one often uses English law, it may be quite useful if we had special jurisdiction for every place where we put a renewable power plant. Let's say we build a renewable power plant in Ghana. We adopt EU law, acquis communautaire, for that piece of land, and we make sure that there's the right to feed in. I find the most frustrating, for example, Greece. Greece has got hundreds of islands that ship in diesel and produce power at 50 cents per kilowatt hour. Why? Because the ship-owning organization, let's call it, for better, manages to keep the monopoly on shipping this diesel to the islands. Yeah? And the poor producers of power in Greece that could produce power at 7 cents per kilowatt hours cannot feed it into the grid. It's impossible in Greece. So I think if we have human rights to affordable power, and we have affordable power, maybe it's time to say for the United Nations or someone else to adopt a standard where we say everywhere where we build a renewable power plant, you have the right to use US, UK or EU law, and then including the right to feed the tariff in. I mean, I think that would be my biggest, my biggest fear is that the regulation will slow us down, because economically I think we will be able to move forward. And as I mentioned, using the car batteries, we also have dealt with the storage problem, I think, to a great extent.
Well, we'd be delighted if English law was chosen as
I didn't say I would choose English law. I would choose acquis communautaire, the EU law.
I thought that what you were going to say, so you've sort of disrupted my flow now here on the panel, but no. I thought you were going to say storage, because, and I'd like to get Mark's views on this and the panel's views, but also, if you don't agree, do you think storage is probably going to be the big influence on how power markets develop or not, Mark?
Just to come back on your previous question, which was if there will be a key parameter will disrupt the market and so on. The way I view it personally, I think there will be an addition of a lot of factors which we start to foresee on the market that will have definitely an impact, and the addition of all of it will make somehow a disruption. And UPP is something that we are all looking at, because this is the most visible part of it. This is the one which is requiring more financing. This is the one which is the more challenging in terms of technical execution. So this is what we are looking today. But if we look at the market tomorrow and we start to see some solution emerging here and there, we start to see decentralized solution, microgrid, storage is another parameter that definitely will have an influence, combination of renewable energy to offer firm power. So there is an emerging of an addition of a lot of technical or marketing solutions which are giving definitely potentially a new trend on the market. And this is one of the reasons it's a bit difficult also, I think, to forecast on the future market that we foresee. We are all reading all the analysis on the trend, and we know what are the big markets that will move the solar activity in the future and the renewables. But there are some big question marks, and one of them is Africa. And because Africa has sub-Saharan countries I'm referring to, not South Africa or North Africa, have limited grid capacity absorption. So how we will play that game? What about the 600 million inhabitants of this continent? Will they wait for the grid to be installed? Will they wait for the billions of US dollars that are needed to connect the people? I'm a bit skeptical on it, and I think we are a lot to be skeptical on that. And there might be some disruption coming from a very strong need from the African market and other markets also in Asia. And I think this is something we should look very closely in the coming years.
Harry and Chris, what would you say are going to be the key determinants of the growth of renewables over the next 5 years?
Well, something that comes to mind will be where the oil price ends up settling, because obviously grid parity relies on what parity is, and as oil prices fall, the cost of conventional generation also falls, and hence competition against renewables comes back to play. So if oil remains at $30 a barrel or falls even further, I think it will take away a little bit of the steam that you see with PV rapid expansion in the market. But nobody knows how long that's going to last. So that's a whole variable. If it lasts for the next couple of months and then suddenly spikes back up, or the next couple of years, it could have quite a different impact on how fast renewable energy continues to spread. That would be one of the biggest things. You mentioned storage earlier. I would just say on storage that I'm not sure how soon that will be available in a way that will affect the grid, but that definitely would be an important development to be able to equalize and enhance the predictability, not just of solar, but also of wind and other technologies that have suffered because you can't sell a contract forward very long with enough predictability without a huge trading arm to be able to manage that by buying off and on the market.
Yes.
I mean, important thing to remember, sorry, I'm talking a lot, but important thing to remember that in most merchant markets, you say, well, the average price is $50 or whatever, and but actually throughout the day or throughout the year, you have huge volatility. So you might have 150 in 1 hour, and you might have 10 cents in another hour because of the demand that's required from the grid. So this volatility and being able to match that using storage will take a lot of the volatility out of the market, will put a lot more stability into it, and would be revolutionary.
Absolutely, and the software that's being developed now is quite incredible. There are some, because parts of Europe have a real need for storage at the moment, we're getting visibility on how that whole area is developing. Jochen, would you like to comment? And also, Jochen, could you say a bit about how, yes, the oil price is going to be influential, of course it is, but with the growth in the electric vehicle market impacting the price of lithium, which I understand has a similar cost curve to silicon, do you think that's going to potentially add some counterbalance? I appreciate we're some way off, but could you comment on that, please?
Yeah, I mean, I think, first of all, the Abu Dhabi National Bank has put up a report by PricewaterhouseCoopers last, I think, January, where they referred to the tender in Dubai by DEWA, which was won at 5.65 cents per kilowatt hour. And they were the first in the world, I think, to translate that to the cost of barrel of oil where that would be competitive. And they came up with $10 per barrel of oil. And frankly, when I saw that, I thought they got to be wrong. That can't be true. And in fact, our PhD in solar spent a month looking at it. BP challenged them officially. And in the end, the answer was 5.65 cent kilowatt hour means oil has to fall to $10 a barrel to compete. So I'm okay with $30 oil. $10 oil, I start worrying. But $30 oil is not a problem. I think $10 oil okay, and then we continue to see a drop. There's also $5 per million BTU. So gas is also not competitive. So I think it's, and by the way, the Sun Edison just did a tender in Austin, Texas at 4 cents per kilowatt hour. They won that tender in PV, and that's then $7 a barrel. So I'm not worried about the oil price as much as, I agree, of course, if it's big difference, then, but I think it's not a big issue. Now on the batteries, there are projects in Germany, we have a special working group on bringing the cost of battery down. In the lithium-ion area, Germany is not going to be world leader, so we're thinking of the next generation of batteries, and we're thinking of putting in place a huge capacity, 10 times the size of the Tesla battery factory, and that should have a major jump in the cost of batteries. But I wanted to just repeat what I said in the presentation. Even at today's cost of batteries, by using the battery to deal with the volatility that we have in the grid in Germany, we earn enough money on the current electric vehicle car battery over its lifetime to pay for it. So the current price as of November 3rd, 2015 for a Nissan Leaf battery is 0. We used to have this idea 3 years ago, was a growth stage portfolio company called the Mobility House. Nobody quite believed they could do it. Well, 3 years later, we had our Prime Minister's Vice Chancellor, Mr. Gabriel, and the CEO of Daimler, Zetsche, and our small little company form a joint venture. And now the biggest global power storage facility using electric car batteries is standing in Dortmund, Germany. Yeah, so we are in a new world where the net price of the battery is already 0. In addition to that, the price of the battery is heading down very, very fast if we get capital behind it, which I hope we will. So yes, I completely agree. The lithium-ion and hopefully the next generation batteries will be much, much cheaper.
Yes, thank you. Thank you, Jochen. Oh, yeah, of course.
Just to say about prices, I mean, I think we all agree it's incredibly exciting to see these extraordinarily low prices, much faster than anyone expected. I think you have to be a little bit careful, though, with some of these headline tariffs, because at least the ones I'm aware of, those tariffs refer to a cost of the kilowatt hour delivered onto the system. They don't cover the system costs that come with intermittent renewable power. So they don't cover balancing, they don't cover capacity commitments. And I think going back to your question of what's going to drive penetration, there are a number of factors. I mean, one is clearly oil price. Another is clearly, from some of the more traditional EBRD markets, what comes out of the COP21 commitments. But I think another factor for the growth markets, developing markets, is absorption capacity. Can the grid actually take these levels? At the moment, we're still talking about countries which, putting maybe 5% of total capacity, which is not total generation. What happens if you start to get to these 10%, 20% targets? And the lesson from countries with high levels of penetration is that you get very large and often unexpected impacts, both physical and economic. You look at the disruption to the Polish grid when you have large flows from Germany, routing out of northern Germany from the wind through Poland, then down to the south where demand is after the closure of the nuclear plants. I mean, nobody expected that, but that's a physical problem that came up. You look at the merit order effect, which is forcing E.ON to mothball the most sophisticated CCGT on the system 3 years after they commissioned it. These are unpredicted, very serious effects, and I think that's definitely an issue which will constrain or at least shape the level of penetration in the next few years.
Do you think, though, Harry, and I ask this question because we are working in some of the maturer markets, and we are actually working on mandates now that are where large companies are gearing themselves towards a distributed energy model, where the UK's national grid is publicly acknowledging that its whole strategy is being disrupted, and these more mature markets are looking at distributed energy. Given all that you've said, and that you're absolutely right, that cost is significant, and I mentioned that. That's why I mentioned in the UK there is quite an expensive response that's required to solve that at the moment. But do you think that will just naturally shift towards a distributed energy model in some of the new markets as well?
I mean, again, I think it depends on which market you're talking about. I mean,
So the national grid becomes less critical.
I think in a way it becomes potentially more critical, or at least more delicate, because, you know, even the sort of most rosy-eyed projections of distributed generation for grid-connected markets, people aren't going to take themselves off grid in any significant numbers for a long way to come. Sub-Saharan Africa, as Mark says, is a different question. No, there is no grid, so, you know, they may just have a leapfrog. They may just say we don't need a grid, we go straight to it. But for markets which are effectively grid-connected, I think the idea of widespread disconnection from the grid is a long way off. I think what will have to happen is that the business model of grids and the regulation, the tariff methodology for grids will have to change. I mean, you mentioned Jordan. It's no secret that the Jordan energy establishment and distribution companies are very worried about the rise in distributed generation, because guess what? It's taking the best customers, you know, the ones who pay the highest tariffs are the easiest to serve and the most reliable payers, it's taking them off the grid and leaving a smaller and smaller customer base, which is more and more costly to service, to pay for the same fixed cost. So I think, you know, there are answers to that, and you can see in the, you know, the regulatory developments in the US of moving towards a per kilowatt charging model for networks, or per kilowatt hour. But those are the sorts of issues that regulators, grid companies are going to have to grapple with in the next few years.
Chris, did you want to say anything on that? Because you don't have to. I just thought you might want to.
No, it's quite all right. I don't have anything particularly to add. It's a good observation from Harry on that point. You have two completely different worlds where you have not had a grid penetration yet, and where you have established markets, and it will affect both differently.
Yes, differently, exactly. Okay, thank you. Well, Harry almost did this for me, because we're going to come to the crux of this panel. We've sort of, you know, laid the groundwork. There are a number of factors which this expert panel, and they're all leaders in the renewable energy sector, in terms of what you think is going to impact the growth of renewable energy, costs continuing to come down, reaching grid parity, the impact of a falling oil price, differences of opinion in terms of whether it will impact or not. I wish that Tim Pelago was on the panel, because he had a very firm view that it was not influential. The ability to finance is key, as Mark has said. But there needs to be capacity. We need an awful lot of renewable energy opportunity in order for the growth to continue with cost reduction, etc. Storage and off-grid solutions will also be important in certain markets and will make those markets more attractive. Standardization, which I think Jochen referred to, and that is something I know the IFC is working on in Africa. And also the impact of COP21, which I don't think we can ignore. I think the generally accepted view is that that is going to have quite a significant impact. So with all of those factors being important to the growth of renewable energy, which markets do you think are best going to be able to take advantage of that? And I know this is crystal ball gazing, but if anybody can answer these questions, it's you guys on this panel, and that's what people want to hear. And then we'll open it to the panel to questions, so that you can feed in your views and ask questions. So why don't I begin with Mark first, if you don't mind?
No, sure. I'm afraid to disappoint you, because I don't think there will be one or two markets. And one of the big trend of the last few years, if you look at the PV market, the total available market in 2010, 80% of the market, 5 countries. Today, 15 countries. And in 2020, we estimate that 80% of the total available market for solar will be spread over more than 40 countries. And this is without counting disruption that we were mentioning before, what could happen in Africa or other countries where grid might be challenged because the grid does not exist, and or is not in a significant size. So we'll have some decentralized solution that will also help to boost the market. So I think now we all know the statistics. US with the renewal of the ITC, definitely big market, will continue to be. China, India, no question of it. Japan, etc. And of course, the Middle East. Everybody is aware, I think, in this room, in this panel, about the big tenders which are ongoing and will continue. There is a big commitment of the region towards renewable energy, and we expect this to continue. So again, I think a more fragmented market somehow, which will be very interesting to follow, definitely.
Yeah. Okay. Thank you, Mark. Jochen, we need countries.
As I said, I'd love to invent this new country where we have EU law and it's in every single country of the world one power plant. From an investor's point of view, of course, what we need is lots of sun, lots of political stability, rule of law, lots of sun, and low costs of financing. And because that doesn't exist, there's a huge investment opportunity. Yeah, if we invest in an EU company, we pretend to be investing in the European Union. We borrow from the European Investment Bank at effectively 0 interest rates, and then we actually take the money to the northern African regions. Then we have a great investment proposal. So I think the opportunity is huge, and we go wherever there's rule of law and sun and cheap financing.
Okay. Harry.
I'm going to cheat. I won't give you countries, partly because our remit is more limited than everyone else's. What I'll give you as a generic point, which I think that the markets which will be big are the ones where you have cost-reflective pricing, and because everything flows from that, and where the opportunities will come. I mean, we naturally gravitate towards generation, utility-scale generation, because it's perhaps the easiest part of a market to get your head around into, and you get to have nice individual plants that your senior management have pleasure in opening. But actually, I mean, Jochen made this point in his slide, there's a huge other market that comes as well in this sector, which is, resource efficiency, building efficiency, demand-side management, the opportunities that IT will give once you have smart grids in place. I mean, business models that none of us can imagine right now, which will emerge once you have this vast wall of data coming out of smart meters in every home. Those are huge markets potentially there, but they will only come when you have cost-reflective pricing, because until that happens, it just doesn't make sense. However much it makes sense environmentally, or however much it makes sense if you look at it from a country economic perspective, it only works if the end-user tariffs reflect the real costs, and then everything flows. And just to give Jordan the credit it deserves, I mean, why is Jordan a leader in certainly the EBRD view of the Middle East? Why have they got the first sort of utility scale private projects done? Not just because of engineers yet, but also because of the end user tariffs, which, while there are still subsidies, still cross subsidies, are high, and which are close to cost reflectiveness. I think that's the key driver, and that's what I would be looking for if I was looking for markets to invest.
Thank you, Chris.
Yeah, I mean, it's such a big world, but and I agree with some of the gentlemen who have gone into more the generic approach. But the markets that I think that will attract the most investment are going to be those that have the population base and the need for energy to develop. So the larger markets being certainly those of Asia and in particular India, Pakistan. Pakistan already has a very advanced system for independent power production, and particularly for renewables. Moving further in this direction, all of this particular region that we're in now has discovered renewable energy and the competitiveness that it produces. We'll continue to see, Jordan and, but in particular Egypt, advancing large programs that can offload renewable energy, both wind and solar power. And I think that all of Africa has a tremendous need to be energized, and the best and most direct way of doing that will be through renewable energy and even some of the off-grid systems that some of the other gentlemen have mentioned. So that's kind of, from my perspective, how we would view it. I think Iran is going to be opening up as a market fairly soon if sanctions remain off. And a lot of people have been watching that market, and they have been advancing a lot of renewable energy programs themselves. So in terms of new markets, that might be one that I'd keep my eye on.
That's very helpful, Chris. So, in summary, where is the resource, clearly, whether it's sun, as Jochen said, or wind, biomass, what have you, where there is rule of law, where there are utility-scale projects, although I slightly disagree with that because I think that the model will change, but I won't argue with Harry here. Cost-reflective pricing is key. The need for energy, so a separate driver that is creating that need for renewable energy and significant population and potential for population growth. And that's leading to basically much of the world, but key markets, US, India and China and Japan, Pakistan, and the Middle East, North Africa, including Iran. Does anybody have any questions for the panel? Because we can probably overrun by 5 minutes or so. So you all agree that these are the these are the key markets. Oh yes, I think, is there a question? Is there a question there? No? Have I got that wrong? No, there isn't, no. So if there are no questions, which I'm very surprised at, all that remains is for me to thank our expert and esteemed panel for joining us today and also for allowing us to finish on time. And would you join me in thanking them in the usual way? Thank you. I can't believe there were no questions.